Hi, I'm Mehdi and welcome to your Finance TV's Crypto Revolution, covering all things crypto and digital assets. We're here with Adam Blumberg, co-founder at Interaxis. Adam, welcome back, mate.
Hey, thanks for having me back, Mehdi. Always good to talk about all the happenings from the last week.
All the happenings since the last week. Well, before we get into those happenings, don't forget to like and subscribe if you want to stay on top of our content. And as always, drop us a line if there's any topic you want us to explore. I do feel, Adam, that Wednesdays, when we record this, have been recently quite strong in the crypto market. But by the time people see the video on a Thursday, we've kind of sold off about 5-6%. So who knows what's going to happen tomorrow? But it's positive and green right now.
It's positive and green. Honestly, I didn't expect it. I woke up this morning and I was a little bit in shock when I looked at the price. Of course, first thing I do, roll out of bed, look at the phone, and immediately look at the price. And I was pleasantly surprised.
I hear you. Me too. So it's always a nice way to start the day. Your
Right.
bowl of Cheerios and some green on the tape.
Exactly. And keep in mind when we're looking at that, look, we can look underneath and find all sorts of reasons. But then the next thing I do, if there's a big up move or a big down move in Bitcoin, I immediately go see what NASDAQ futures are doing. And I go and see NASDAQ futures are up and I go, okay, we're back to this. We're back to just following what every other risk on asset is doing.
Well, before we dive into a lot of this, let's start on the macro front, right? So, as you say, things have been kind of a bit rosier in the world of crypto, and it seems to be following suit with Nasdaq. And I'm not huge about bringing Kathy Wood as my barometer of the market, but she's been, getting a lot more traction with what she's saying. The price move we've seen, obviously, in Bitcoin is making her and others like her more vocal and prominent in the news cycles. There are some valid points that seem to be coming out with these concerns in the banking system, the traditional banking system. And it has renewed interest in crypto. And obviously, more specifically, Bitcoin, which obviously is a big daddy on the street, but Bitcoin is obviously seen as a store of value. So we've seen some of these moves. We've seen more renewed interest. People are asking questions and people are getting involved. What do you think? This is all good.
Right. And I think a recurring theme we're going to see here, Mehdi, today and for the foreseeable future, as you and I talk, is increased adoption and what is causing increased adoption. And when you see issues like the banking, issues we've seen here recently, and obviously moving across the pond into Europe, it's not necessarily that people are going, oh my gosh, I got to get all my money out of banks now, and I got to get it into crypto custody. I got to get it into Bitcoin because I think there's going to be inflation. What it does, though, is it starts those conversations. It starts people thinking, because during the time of that crisis, right, during the time that we're not sure what's going to happen to Silicon Valley Bank and Signature Bank, there are people going, what are my options? What are my alternatives? And that's when they start going, oh, I remember people talking about this Bitcoin thing and talking about this weird, not your keys, not your crypto kind of phrase. And I wasn't sure what it meant. But now, when there really were people who were unsure if they were going to get their money out of the bank above the FDIC limit. And they never thought that would happen before. No one thought that would happen in a registered US bank, regardless of what the limits are. When you see that happening and you see bank after bank after bank that might get hit by some run like this, and then you start going down that road of like, well, either the Fed can protect the banking system, which might cause inflation, or they can, protect inflation and not have inflation run too hot and kill the banking system. And people are starting to learn now. These are the reasons. These are the reasons Bitcoin was created. So we don't have to rely on a bunch of people who are unelected officials to decide which direction they're going to go.
I'm very inclined to agree with you. And it's also, things have changed since 1930s, right? Where there's a bank run, you turn up with your suitcase and you line up outside the bank and you're like, I want my money, and just put it in this suitcase and off we go. Now we can sit there on our smartphones and basically transfer money from one bank to a new bank, into Bitcoin, into USDC, into ETH, whatever we want to do. You can do it on a mobile basis and a very easy electronic basis of utilizing these rails of getting from your traditional bank, your Silicon Valley bank account, and you can end up putting it all in Bitcoin.
Right. And you can. Right. And along the way, like, look, the bank runs we saw, Silicon Valley and others, it was people able to do it. One, do that electronically. Two, the word spread electronically really quickly. So as you said, the rules that were in place in the 30s are a lot different. The reality right now is a lot different. So if we go back to where we started the discussion with Kathy Wood, I don't want to, again, say she's not like a prophet or anything like that, but if you read into all this and go, okay, that people are kind of getting the idea there might be issues with the banking system. The U.S. may have to either change how the banking system operates, or they may have to print a whole bunch of money. All of these things. Here's what's happening in Europe, and maybe Kathy Wood and ARK is going. We see in the really long term where more and more people, as they learn about this, are going to naturally progress over there. They're going to naturally progress over into owning Bitcoin. And she bought a bunch of Coinbase stock. They're going to naturally progress into utilizing Coinbase as an on and off ramp. And Coinbase at some point might perform some of these services. So I think that's really the kind of investment thesis. A lot of the investment thesis that Kathy Wood has is like, let's look overall at traditional finance, at crypto, at technology, see the directions people have gone in the past. How was internet adoption taken up? What caused it? What was the catalyst to get people in the internet? What is it going to be the catalyst to get people into Bitcoin? Coinbase is probably a part of that. Therefore, we want that in our fund. And look, it's okay for us. We know that it's going to be highly volatile for a while. We know last year we were kind of made fun of a bit, but we're going to stick to our guns. And this is the long-term investment thesis. And we don't care that it's down right now.
And Coinbase does seem to be emerging as the friend of the institution looking to invest in crypto. And we've seen obviously FTX. We'll come to it in a moment, but the CFTC and Binance. But Coinbase does seem to be emerging as the comfortable solution for a lot of these institutions. And just on that point, it's great that Joe Blogs can sit there and go, okay, I want to move some of my cash reserves in my banking system into Bitcoin or ETH or whatever they want to do. It's great seeing that the institutions are actually starting to do similar transactions, obviously on a larger scale. We've seen some of these larger players really increase some of their holdings. It's not just in Bitcoin. We've seen Ethereum, USDC, a lot of these assets. People are watching these wallets, right? So they can basically see what's happening. But there's been a real bump in some of these holdings.
Oh, there definitely has, and we're definitely seeing it from an institutional perspective because they're looking out at the same things like Kathy Wood is looking at, right? Like they're looking out long term, and they're going, here's where we think Bitcoin could be, or just here's why we need to hold it. I mean, maybe it's just a hedge. Maybe it's not simply we think Bitcoin's going to go to $1 million, but it's just like we think the value of the dollar is going to go down. And we think Bitcoin will hold its value, or we're just worried about our money sitting in a bank and we'd rather custody ourselves.
Makes life easy. Before we roll on to some of the regulatory chat, there was also, everyone's obviously coming out, and you mentioned it there, right? The $1 million price target on Bitcoin. Everyone has their 2 cents to throw in on price targets, and there's so many theories and ideas and reasons why we're going to go to $1 million per Bitcoin. There was a great article that did catch my eye. It's about string theory, and I don't know if you had a chance to see it, but it had some good squishy math. Are you laughing at me now? Because I got my nerd on with this squishy math. I'm like, this is great. This is really fascinating. We're going to have a rally for the next 2 months until June, and then we're going to see 41,000 and da da da. I'm like, and then we're going to sell off for a bit. But what are your thoughts on some of these theories that are being punted around there? And I know there's no price target coming from you, but
yeah, it's some of them are fun, some of them are kind of silly. A lot of it is like there's people who are drawing the charts and showing you where things are going to go. I did read that article. Look, I'm a big fan of string theory. I'm a big fan of chaos theory. All of those things that I've I don't want to say studied because I didn't formally study, but have read about in the past. Right? If you read Jurassic Park, you had to go learn about chaos theory. I bought the book about chaos theory and had to go learn about it. And I know and realized I'm way in over my head. Anyway, reading the article about string theory and where we think Bitcoin's going, I think what we found in the last few years is there are going to be so many other factors, right? You can look at the history of Bitcoin and what price has done, but as you add adoption, then I think what has happened in the past in terms of price is less and less relevant. And look, that might be me being naive, and there might be, chartists and there might be traders like that go, no, it's tremendously relevant. You just think that other factors are there, but really it's traders moving the price. So I really think that there are just multiple factors, right? That's one of them. We've obviously, we saw in the past people putting up charts and saying, here's what happened before the last halving, here's what happened after the last halving. We had another one, and everyone said, okay, obviously this time it's going to go to $100,000 or 150. We didn't get there. Why? Because there are macro factors, and there are Bitcoin factors, and obviously there were issues with exchanges and liquidity, and all of that has to factor in as well. Right, you have to talk about, is Bitcoin legal? Are the exchanges legal? Are people going to be able to on and off ramp? Are banks crashing, and is that what's causing the price? Do we have too much correlation with Nasdaq? All of those things also have to factor in, and maybe maybe part of the string theory is that is all factored in. You just don't realize it. Like, you're thinking of it on a day-to-day basis, and if I look just at math and plugging data in, all of that actually is factored in, right? On some sort of weird string idea that I'm sure there's going to be a movie about, someone going back in time and messing with the price of Bitcoin.
Right, it's going to be called String Coin.
String coin. There you go. You trademark. There you win.
But you mentioned it there, and that's a perfect segue into regulation, right? And we've obviously had our weekly regulation hats on, but we've seen a couple of events unfold over the last week or so. We saw the CFTC go after Binance and its CEO, CZ, which actually initially did put a ton of pressure on Bitcoin, but we've since recovered. We do again have this bad actor, right? People don't want to see these types of things happen. And it's also, he runs the largest crypto exchange in the world, and it's been running it with little or no oversight from formal boards and advisory roles and all this type of stuff, and it's sounding a little bit FTX-ish. What does this again screams for more regulation in this industry?
It really does, and if you read again, I'm not a lawyer. I'm not going to pretend to be able to decipher what's happening with the CFTC and Binance issue. Now, we saw a huge drop in the price when that came out. Of course, one of those things. I look at the price of Bitcoin, I see a big drop. I go to CNBC and see what the futures are doing, and then I go see, is there any news? And that was the news I saw. And it's the typical knee-jerk reaction, like, something against the largest exchange in the world. What if they get shut down? I'm just going to sell and get out because I'm not quite sure what's going to happen. And today we're back to this, like, okay, things are the same as they were yesterday, right? Actions like this take a long time. This is a civil lawsuit. I mean, I have family that have been involved in civil lawsuits for 5 and 6 years. Can you imagine if this drags out that long? It's going to be really pretty irrelevant. But you're right in that the idea here is we do need some sort of guidance. We need some sort of regulation to say people need to be able to get on and off safely in and out of crypto. But in addition, part of what I've read into the CFTC lawsuit against Binance and CZ is, once they're in that exchange, things have to be fair. And a lot of what I've read in this is CZ himself, or entities controlled by him, or entities owned by him, were maybe manipulating prices or something. And you have to know that the CFTC says, look, we've said we feel like Bitcoin and ETH at least are commodities, and if people in the US are trading commodities, then it has to be fair once they're in there. In addition, what they've said is, CZ and Binance were kind of openly helping people in the US skirt the KYC rules and almost telling them, here's how you do it if you want to open a Binance account, even though Binance isn't legal there in the US. Here's how you can go about doing it. And all the time telling the CFTC, yeah, we'll come in and we'll file what we need to file, and we'll get on board with regulation. But in the background, they're trying to onboard as many US citizens as they could through kind of back doors. And I think that was a big problem. So the CFTC, my feeling is, unlike what we've seen with the SEC, is the CFTC is actually kind of going the route of, we want to keep investor money safe, not we want to shut the whole thing down, right? It's once people are in, like, we want people to be able to get in if you're legal, as long as you come in and talk to us. Once you're legal, it needs to be fair once they're in there. Those are the two big things, which, again, if someone would have done that to FTX, this, it wouldn't have gotten as big as it did.
Absolutely. And that's one of the things to highlight is these exchanges are getting big. We've got to really, start thinking about some of the structure and guidance, and the CFTC is obviously side-handedly trying to do this, not formally enough, but they are trying to put some structure around it, and as you say, some guidelines on how they should be acting, what should be
Yep.
say for regulating a commodity. Now, the SEC. The SEC seems to be getting a bit more verbal as well, but more on the crypto endorsement side of things. There's been a bunch of celebrities who have, and there's a list here of who's been fined what, and this is it's good and it's bad, right? The fact is that unfortunately, when you're sitting there watching TV or you're on Twitter or you're on LinkedIn or whatever it is, and you see Johnny Celebrity sitting there endorsing crypto coin XYZ, it perks your interest, right? And they carry a lot more weight and credibility, and I have to say credibility,
Right.
right, than they should, especially in this day and age. But they do, right? It is what it is. So I'm glad to see that the SEC is starting to, get harder on this and start finding these people and calling them out. So hopefully it does put a bit more of a restriction on how far these guys go. But are they doing enough?
Uh, I don't know what to say if they're doing enough. I see plenty of people promoting things on Twitter and all that is a just a bunch of crap.
Yeah.
But this is one aspect. This is one thing the SEC is doing that I pretty much agree with. And the difference here, the important thing, Mehdi, is of course all these celebrities were fined some amount, and the SEC went as far as to say we're going to calculate how much you made from this, and we're going to fine you anywhere from 4 to 8 times that to make it to where it's not worth it for celebrities to do this anymore, because they're going to get fined 4 to 8 times what they made on it, and hopefully they'll figure out it just doesn't make sense. If you're a celebrity, you have plenty of other things you can do with your celebrity and your money than endorse crypto and maybe get fined 4 times what you made. So I think this might effectively put an end to that. But what we have to do is look at this juxtaposed to the people like Matt Damon, who got paid to create to be in a commercial, and that to me is a bit different. That's not him endorsing crypto. That's endorsing an exchange in his case, getting paid to actually act and be in the commercial, versus what the celebrity endorsers that you're referring to, who basically went on social media and said, buy this token. I think you should buy this token. I'm buying it. Those kinds of things. That isn't legal for any financial services. You can't have people that are not licensed go on and tell you to buy things. So that kind of endorsement is what they're going after. They're not going after the Matt Damon style, Larry David style endorsements.
Before we wrap, a wonderful real world application, a real world application of NFTs, the real estate player buying an NFT home. Run us through this transaction. This is very cool. How it was structured, what this could mean for the real world, the world of real estate investing. This is a really cool transaction on how things can be made more efficient.
Right. And this is kind of a start to what we could see. And I told you, Mehdi, like I created a whole YouTube playlist. I think it's like 7 or 8 videos about how I think Web3, or crypto will play along with mortgages. And this kind of fits in there somewhere, which is there was basically a crowdfunding. So we're relatively familiar with crowdfunding for, startup businesses or something like that. Well, this is crowdfunding to buy a house. Right. And so it was a group that had to go through all these legal loophole or not legal loopholes, all this legal work to be able to say, we're going to find a house, we're going to buy it. It was important that it was a house that didn't already have a mortgage on it. It was, owned free and clear. So they're able to do that. They don't have to deal with another lien or something. And then they were able to go crowdfund. And crowdfunding is no different, whether it's crypto or traditional finance. That's the important thing. They filed with the SEC like they were supposed to do. And then they went and crowdfunded to buy this house. The difference that we're seeing is the house and the ownership shares are NFTs. They're non-fungible tokens, which you and I have talked about. There's going to be a broader use case for non-fungible tokens than just pictures of monkeys. And in this case, I can prove my ownership of a small piece of that home by virtue of the fact that I own this NFT. And in theory, at some point, I could transfer that ownership, that value to you. So if I own 1/20th of the house and maybe it's being leased out and I'm getting income by virtue of the fact that they're leasing out the house, uh, someone's paying a lease, and then that can flow through to me as the token holder, and I can sell you my interest because it's just an NFT. That's really what we're kind of seeing here and what we're at the beginning of. You still have to play nice with regulators. You still have to play nice with county records, right? There still has to be a record of all these transactions, which is a regular, legal paperwork, all of that. But a lot of the denotion of my investment in this particular offering is done via NFT and on chain. So it's not that this is completely outside the realm of regulation. This is actually well within it. We're just using the idea of NFTs and public blockchains such that I have a transparent way to show you what I own. And I have a transparent way to move that asset that I own, which is a piece of a house, over to you. Right. And that's kind of where we're going. And some people might go, well, why do we need that? It's silly. Like, we have a system that works. And it's because once you start going down that road, you go, oh, well, now why can't we create tokens that represent ownership in more houses? And I might own my house completely by virtue of the fact that I own the NFT. And we've talked about this before. And it's just a more transparent way and a more immutable way to keep track of things. There's more likely, as we talked about earlier, people are looking at self-custody. People are looking at ways to get my assets out of traditional custodians. This is going to be kind of a natural way we're going to go as more people have wallets, as more people are transacting on the crypto rails, and they're going to go, okay, I know when I buy my house, instead of going to the county and having a deed and all that, everything is just transacted on chain. And so that to me is, about this is really interesting. It doesn't make it a speculation. It doesn't mean the value of this token is going to go through the roof or moon or anything like that. It's just barely making the next step, the next iterative step in going traditional finance crypto. But it's the same investment. It doesn't really matter. It's just giving you more transparency, potentially more of a market, more of a liquid market at some point from my 1/20th interest in this home. That's really what we're looking for. And Homebase is the one that we're talking about. Homebase is one. There's one called Proppy. There are several other companies that are looking to do this, and there are several other groups that are tokenizing real world assets like this. And a lot of times it ends up being real estate. But look, it's pretty exciting. The other exciting part, I know I'm talking a lot here, Mehdi, and I apologize, but the other exciting part for me of this article and this story is a good number of the people that invested, it was their first time setting up a wallet. It was their first time transacting with crypto. And so this is how we get to more adoption, is real use cases that people kind of understand and go, oh, well, I want to buy a small piece of a home. I want to crowdfund the purchase of a home that's going to produce income or going to grow in value. How do I do that? And then they start learning that way. So it's not that these people want to invest in Bitcoin or ETH, and it's not that they want to play in DeFi. They just wanted to buy a small piece of a house, but they had to learn how to set up a wallet, and they had to learn how to buy USDC on Solana, and they had to learn how to make that transaction and sign a transaction and see what their NFT looks like in their wallet. That to me is pretty exciting when it comes to adoption as well.
Adam, it seems like, it's all about education. And if there was only a place that people could go learn more about crypto assets, well, crypto and education and digital assets, I wonder where they could go. Why don't you tell us? Is there a website?
I feel like they can go to our YouTube channel, but especially if they're financial professionals, they can go to interaccess.io and take one of our courses and be a certified digital asset advisor.
And strangely enough, there's a website there. Guys, Adam, thank you so much for sharing your thoughts. It's always fantastic chatting crypto with you.
Great, Mehdi. Thank you so much for having me on again.
And until next time, good luck investing.